We are so excited to welcome Barbara Weltman. She is the founder of Big Ideas for Small Business. She's also an attorney who was called the Guru of Small Business Taxes by the Wall Street Journal. Additionally, she's a prolific author of important books like J.K. Lasser's Small Business Taxes and 500 plus Big Ideas for Small Business. We are very excited to welcome Barbara today.
Well, thank you. I'm glad everybody could join me today because taxes are an important issue. And of course, it may not be your favorite subject. I know a lot of people are not crazy about taxes, but it really makes a difference for your business. My goal today is not to make you a tax expert, but to give you a good understanding so you just kind of feel more comfortable about the subject. You kind of know better how to navigate uh, where to find answers and get help and some basic issues that will help you run your business better. Taxes are really vital, and they do affect your business decisions. And I'm going to go through some of the decisions and explain why you have to have an understanding of taxes in order to make good business decisions. It also affects how you set up your business from a legal standpoint, your entity, whether you're a sole proprietor or a regular C corporation or some other entities that I will run through. I'm also going to discuss the importance of bookkeeping. You don't really have a choice about doing it. You kind of have to do it, and how to do it effectively and easily. I'm going to cover the tax basics about income taxes and the other tax responsibilities that you may face, filing tax returns and deadlines that you should know about to keep you on task and avoid late filing penalties, late payment penalties, and such that you really don't want to run into in your business. And then I'm going to talk about how to handle taxes, whether you're going to do it yourself or you're going to use a tax professional, or what kind of tax professional to use. And finally, I'm going to give you some ideas to help you cut your tax bill now. Maybe you haven't filed your 2025 returns yet, and there's still things that you might be able to take advantage of. And it certainly will help you position yourself better for 2026 and know about estimated taxes if you need to pay them. And finally, we're going to have time for your questions at the end. So if you have questions, make a note of them, put them in the Q&A box, which you can find at the bottom of your screen. And I'll be glad to answer them if I can at the end. So let's talk about taxes and your business. Tiffany, you're going to have to advance this. It's not working for me, so I'll ask you to advance them, Tiffany. So Uncle Sam is your is your silent partner, if you will, and takes a share of your profits in the form of taxes that you have to pay. So you need to know what that is all about. Remember, the important thing, it's not what you earn, but it's what you keep after tax that really matters. So understanding taxes will help you make good business decisions. So the type of entity that you use to run your business, to conduct your business activities, choosing how to finance to get started, and to grow your business, whether you're going to borrow money, whether you're going to take in investors, whether you're going to do both. And again, taxes impact your decisions in that regard. Also, taxes affect how you handle the workers that you need. Should you employ to have employees? Should you use independent contractors? From a tax perspective, that's quite different. Practically, this different too. But again, the underlying theme for me today is to emphasize what the tax results will be for your business decisions. The same is true for the machinery and equipment that you need. Maybe you need special tools. Maybe you need just laptops and office kinds of equipment. Any way that you look at it, there are different results if you buy the equipment or if you lease it. And again, there are, just to repeat myself, there are non-tax consequences to these decisions, cash flow and other matters, but we're going to be talking about taxes. Okay, let's go to the next. Okay, so let's talk about the legal and the non and the tax considerations for your decisions about how to conduct your business activities. So I'm going to run through the different results, and then we'll talk about which options you should use. So from a non-tax perspective, one of the considerations for your choice of entity is personal liability protection. In other words, if your business fails and you wind up owing a whole lot of money, can creditors come after you? Can they get your house? Can they get your personal car, your own bank account, all of your personal assets? And the answer is they can, unless you are a corporation or a limited liability company, an LLC. These are entities that are formed under state law. So it's a state matter to set up your entity. And then the federal government recognizes your entity choice. Another non-tax issue is your ability to bring in more investors, co-owners, if you want to do so because you're just expanding and you want more talent or you need more money. There are various reasons why you would want to bring in new investors, but it's easier if you are a corporation for sure, because you can just share in the stock. You can also do it with a partnership and an LLC, but it's a little more complicated in terms of splitting things up. Some people contend that if you are a corporation and you show the Inc. or Corp. or Ltd. that you're required to do if you're incorporated, it's kind of a marketing advantage. It tells consumers and other businesses that you're very official, if you will. You're permanent. It's an entity that's separate from the owners, and so it may have a marketing advantage. So from a tax perspective, there are two ways to look at your businesses. One is as a pass-through entity, and one is as a separate tax-paying entity. So a C corporation, a regular corporation, all the Fortune 500 companies and all the corporations listed on the stock exchange are all C corporations, regular corporations. All other entities, sole proprietorships, partnerships, limited liability companies, are what we call pass-through entities, which means that the profits and losses from the business pass through to owners, and owners report the results on their personal tax returns. So that's a big thing, and I'm going to touch on that more later on. Another consideration is how you personally can take money out of the business. So if you have a C corporation or an S corporation, you can, you are an employee and you can take a salary and you can have withholding from the salary and such. If you are an LLC or a partnership, you are a self-employed individual and you can take a draw, you can take distributions, but it has no tax effect. So because you're paying your tax on the income that passes through to you, and it's not reduced by the draw that you take. Tax returns. I'm going to list the tax returns that you will be filing depending on your entity selection. And then, of course, there are state tax considerations, state income taxes. Most of the states have them, not all. I'm in Florida. We have no state income tax here, but there is a corporate tax. Why do I keep hearing beeping? Do you keep hearing beeping? All right, I'll keep going. So again, state tax considerations, another thing to think about. Okay, next slide. All right, let's talk about the importance of bookkeeping. And when it comes to business, you don't have a choice. It's not like your personal finances, which you can be a little more loosey-goosey with. You can throw your receipts in a shoebox or a file folder, and you can handle things down the road. But the tax law requires businesses to keep books and records, and you can't. I will just point out to you that there have been many cases that have people have lost out on legitimate write-offs because they didn't have bookkeeping, they didn't have records, they didn't have what they needed. And so it was said that you can't use guesstimates, it has to be exact. I will point you to IRS publication 583, which is all about bookkeeping for small business. And it has a lot of information. It's very readable and will certainly help you get started. There are non-tax reasons for keeping books and records. How do you know how you're doing? Are you making a profit? Are you in a loss position? Well, you really don't know unless you keep good books and records and you look at them and keep them updated, and that will help you know where your money is going. So many businesses are great at making sales. They're bringing in sales left and right. But at the end of the road, they're not making a profit because their expenses are out of hand. And how do they know that? Well, they don't know it if they're not keeping records. So they think their salespeople are doing great, and then they wind up in a loss position. So again, and then how much do you trim the expenses, and how are they going to be handled for tax purposes? So again, the records are important. Now, the big question is who is doing the books? Who's doing everything? You do not have to be a great numbers person to do it yourself. Today, I'm going to get into various ways you can do the books. And again, it's simple putting in income and entering expenses. And you don't have to do calculations. You don't have to do anything. The software does it for you. Many businesses have an employee handle the record keeping, a so-called inside bookkeeper, if you will, and that's great too. As businesses grow, it's probably likely that you'll need to turn to outside help for this, whether it's an outside bookkeeper or your accountant, or that will be able to manage things for you. And it makes a difference because it's not that it's onerous, but you get to a point in business where your time is more valuable than what you would pay an outside expert in bookkeeping or whatever other thing you're talking about to handle things for you, rather than trying to research and do things yourself. So that's something to keep in mind. All right, let's go to the next slide. Okay, let's talk a little bit about tax basics. So next slide. So there are various types of taxes that you have to contend with. Maybe you don't have to deal with all of them in your particular business, in your situation where you're located, but be familiar with all of these different taxes because you are responsible for them. And just to emphasize, even if you use an outside, you use a CPA, accountant, or a outside person to handle things, as the business owner, you ultimately will remain responsible for all of these obligations. So you have federal income taxes, and this is the annual filing of the profit and losses in your business and listing all of your expenses and other tax items. In 34 states, you have state, and you may even have local income taxes to also pay and and fill out returns for. When it comes to workers, you have if you employ anybody, even if you are the only employee of your corporation, you have a FICA to pay, which covers not only Social Security taxes, but also Medicare taxes. And there is the employee share and the employer share. As the employee, you're responsible for withholding the employee share and then depositing that along with the employer share. If you are self-employed, you don't pay FICA. You pay self-employment tax, and you pay it on your self-employment income, and typically you include it with your estimated taxes. So your self-employment tax covers the Social Security and Medicare portions. And you're covering the employer and employee share effectively, although you can deduct one half, which is the employer share. So again, it's comparable. It's not exactly the same, but it's pretty comparable. Again, if you have employees, you have a FUTA tax, federal unemployment tax. This tax helps support states to pay their benefits. It's not something that comes directly from the federal government to workers, but it's an obligation that you must pay. You also have to pay state unemployment tax for your employees. And again, the rules for state unemployment tax vary considerably by location about the rates and who can opt in, who can opt out, and so it's something to explore. Sales tax, if you are selling goods and services that are subject to sales tax in your location, you don't pay the sales tax, you collect it and then you remit it to the state and file a return for it. Now, if you are a remote seller, meaning you're selling goods and services in another state, you may also be responsible for collecting from the sale and remitting it to the other state, although there are exemptions from this remote seller obligation for small businesses. Finally, there's excise taxes. Back in the day, before the income tax, before the amendment in the Constitution that allowed income tax, the federal government ran on excise taxes, whiskey tax, and other things. So now, today, we still have excise tax. It's an indirect tax on goods and services, specific goods and services, and it's kind of there's no real theme here. Tanning salons have an excise tax. Operators of heavy vehicles have an excise tax. Take your pick. Okay, let's move on to. I'm trying to give you just a broad overview of things here, and I'm not delving into any kind of real detail, but hopefully this will inspire you to inquire further. So the tax forms that you need to file. So if you're a sole proprietor or you're an LLC, but you're the only member and you don't elect to be treated in any other way, you're considered what's called a disregarded entity, and you'll file the Schedule C with your 1040 or 1040 SR. So again, it's not a separate filing. You don't have to submit it separately. It's part of your 1040. If you're a partnership or a multi-member LLC, you file the partnership return, the 1065, which is really just sort of like an information return to tell the IRS what the partnership did for the year in terms of income and expenses. The partnership and LLC has to issue to the owners a Schedule K-1. And this is the form that tells you, the owner, what you have to report on your personal return. Because let's say you have a 50-50 partnership. Well, the 1040 will report the entire profit, but the K1 will tell you 50% of that to reflect your ownership share. S Corporation files an 1120S. Again, in almost all cases, it operates as an information return, and the corporation issues a K1 to the owner. A C corporation is a separate taxpayer. It files its own return, it pays its own taxes, and the form is the 1120. With respect to FICA that I mentioned before, there's a quarterly return that you're filing, the 941. Or for very small employers, there's a 944, but 2025 is the last year that this small employer option will apply. For federal unemployment taxes, it's the 940. So, okay, let's go on to deadlines because we're coming up to them, and I want everybody to know so that you won't be late. So, with respect to income taxes for 2025, April 15 is the deadline for your Schedule C for sole proprietor. For calendar year C corporations, calendar year corporations mean corporations that aren't reporting on a fiscal year. So if it's a C corporation, it has the same April 15th deadline. You can request a 6-month filing extension, and you don't have to give any reason to why you want the extension. All you have to do is just submit it on time by April 15th. Just note that, let's say you're a sole proprietor and you get a filing extension, it doesn't give you more time to pay your taxes. So it only gives you more time to file your returns. Partnerships and S corporations on a calendar year, and most partnerships and S corporations do report on a calendar year, March 16th this year. So again, a 6-month filing extension is available. And of course, that's going to delay the K1 that comes to you, the owner. Employment taxes for this year, these are quarterly filings. And so I have the dates here for you. Different date for those who employ farm workers. And FUTA is an annual filing deadline. Just check your state filing deadlines. They may be the same or they may be different. There may be a special procedure to obtain a filing extension. In some cases, the requesting a federal extension automatically extends the state return, but again, be sure to check. Okay, next. I think we went too far. We passed tax prep. No, you went too far, I think. Yeah, go back. Yes, now income tax concepts. Here we are. We're at the right place now. Okay, so understand that for tax purposes, you're reporting your income or your loss. So you may think of it as your gain, how profitable you've been. That's what it is. It's your profits that you're paying taxes on. And that's just the difference between the revenue that you take in and the deductions that you're allowed to offset that revenue by. And that it, in a nutshell, is what you report as your profit for tax purposes. Inventory rules. If you are a business that keeps inventory, understand that the sales that you make aren't what you're reporting as income because you're offsetting it by cost of goods sold. It's a special tax term, cost of goods sold. There are different ways to compute it, but basically you had to buy the goods or make the goods in order to sell them. And so you get to offset what revenue you are reporting as your income. Uh, Deductions and tax credits. For businesses, most expenses that you incur are going to be a write-off. It could be a deduction or a credit. But there are a lot of rules that will limit how much you can take as a deduction or a credit and when you can do it. Understand the difference between deductions and credit. Deduction is worth to your business as much as the tax bracket that you're in. A credit is a dollar for dollar reduction on the taxes that you owe. So, for example, if you have $1,000 deduction and you're in the 24% tax bracket, that deduction is worth $240 to you. If you have $1,000 tax credit, it saves you $1,000 in taxes. So that's a big thing to consider. Okay, let's move on. All right, there are, the tax code is huge. And it's continually changing. And I mean, that's what keeps me working all the time to try to explain all the new rules. We've had new rules just this past year that applies for 2025 returns and some starting in 2026. And there's a lot to keep up with. But what's interesting to me is that there are a number of tax breaks exclusive to small business. Now, what do I mean by small business? Well, for different breaks, there are different definitions. Some are based on the amount of gross receipts that your business takes in. Some is based on the amount of assets. Some is based on the number of employees. So you kind of have to look at each specific tax rule to see if you are a small business for that particular tax break. I've counted over 3 dozen rules specific to small business, and you want to take advantage of them if you qualify. For example, and I just have a couple of things here. If you have a credit card debt or a business loan or a line of credit and you're paying interest, as a small business, you can deduct all of your interest. No, there's no dollar limit or anything. Versus if you're not a small business, there's a limitation. There's a formula to use to determine how much interest you can take each year. So it pays to be a small business. There are 5 special tax credits related to retirement plans just for small businesses. So there's one for starting one, a startup credit to cover the costs of explaining things to your employees and administrative costs. There's one if you use auto enrollment to automatically enroll your employees in the plan. There's one for the contributions you make. Instead of deducting employer contributions to 401k plan, if that's the plan you have, you would be able to take a tax credit. And I just told you the tax credits may be better than the deduction. There's a credit for quickly enrolling a spouse of a military member, and there's another credit for making contributions on behalf of that particular spouse. There are special options when it comes to health care. There's a tax credit for to encourage small businesses to pay at least half the cost of premiums for your employees to provide insurance for them, and that's a tax credit. There's also a special type of health reimbursement arrangement where the company, the employer, gives employees a certain dollar amount for them to go out and get their own individual coverage. And one of these health reimbursement arrangements is a qualified small employer health reimbursement arrangement, a QSERA. And again, there are dollar limits on how much you can give to employees based on if they have self-only coverage or family coverage. But I hope I'm just giving you a flavor of some of the really unique tax rules for small businesses that may really be a great help to you. Okay, let's go on to tax prep. And we can go to the next slide. So, as I said, you don't have to be a tax expert. You don't have to be a math expert to handle your tax responsibilities. Basically, when it comes to basic bookkeeping, it's a question of just inputting your revenue and inputting your expenses, and then the software kind of populates it where it should be. And the same is true for tax preparation. Again, if you're using software, you just answer the questions and provide the information. And in some cases, you can do this automatically with the click of a button to transfer information from your bookkeeping software right into the tax program. So again, it's not all that hard. It's just something that you have to do. Whether you should do it yourself or use a tax professional, there's no one size fits all. You do need to look at your personal situation. Is it very complicated? Is it simple? Are you comfortable with it? Are you like, is this the worst thing? People who can't look at the sight of blood. I think I equate that to people who can't think about taxes and they have to use outside people. Uh, Again, if you do go for software, the costs are really kind of modest. Um, the advantage, I think, for some businesses to use professionals is that not only will they fill in your tax forms and maybe even keep your books, but you might also get advice on a heads up on new tax rules that may require actions on your part in order to take advantage of them, especially if there are deadlines. They may be able to advise you on better ways to manage your inventory. Again, the tax professional can really have some value added for your business. Of course, you pay for it, and you have to weigh can you afford it, and is the advice you're getting worth it. I also want to point out the IRS help. The IRS is not the enemy. I think that over the years, their publications have improved tremendously. They're pretty readable. They have tons of YouTube videos. You can check out what they offer, and in many cases, they're very good. It's still difficult to get through on the telephone to the IRS. There is a dedicated line for businesses to call versus the regular 1040 line for consumers. But again, it's still very hard to get through. So but looking into things. Look, we as small business owners can't afford to call a CPA every 5 seconds to get an answer to a question. So we have to do a lot of the legwork ourselves. I will caution that using some of the AI like ChatGPT, take it with a grain of salt and then check it out with the IRS, because I regularly get misinformation in terms of numbers from ChatGPT. So when it comes to tax information. So again, it's a good starting point and can be very helpful, but just verify before you rely on it. Okay, let's move on. Okay, let's say you decide to use a professional. Well, you have a lot of choices, like, and who are you gonna use? So think about what it's going to cost you and what level of expertise you need. So an enrolled agent, for example, may be perfectly suitable to help you in tax return preparation. And they can represent you in front of the IRS if an issue comes up with respect to that particular return. A CPA is yet a higher level of professional assistance and can offer even more help. A tax attorney, for small businesses, you usually don't need one unless there are some tricky questions in terms of what's going on. I know everybody who's here is trying to do the best thing, and you're not doing anything nefarious, and so you probably won't need a tax attorney. But I'm just saying that's an option out there. Okay, let's go to the next one. All right. So you want to keep your taxes as low as possible. You work very hard. I'm sure all of you do, and you don't want to waste opportunities to reduce what you have to pay in taxes. So you want to check out what is available for you. Right now, there's so much information out there, and I hesitate to direct you in any particular uh, place. As I said, the IRS has information. I have information. Um, just see what's new, because don't just assume that what you did last year is going to be the rule for this year. It may be better, it may be gone. So again, you want to know what options you have. And then be sure that you understand the record keeping rules for tax purposes. We refer to this as substantiation. And without meeting these specific rules, you can lose out on a legitimate deduction. For example, if you use your personal vehicle for business driving, you must keep a log of your business driving, and that has to include certain very specific things, so your odometer reading, the date, your destination, the purpose, and such. There are apps to help you with this, and it's not too onerous. But if you don't have the information, even though it's acknowledged that you did do the driving, you may lose the deduction. So again, just understand what you need to do. I will direct you to IRS publication 463, which is for travel, meals, and driving, and business gifts, and it has the specific substantiation rules for those types of items. All right, let's go on. All right, I just wanted to, before we leave, I just want to and get to your questions. I do just wanted to touch on some common deductions that you might encounter and that will help you cut your taxes. So, health coverage. If you pay premiums, just distinguish the type of business that you have, the type of entity, and who's paying what. But if you are self-employed, you can deduct 100% of your premiums without having to itemize your personal deductions. So that's something to think about. And that rule applies to S corporation shareholders who own more than 2% of the corporation. So partners and S corporation shareholders more than 2% are treated like self-employed for purposes of this particular deduction. If you have a regular corporation and it's paying premiums for everybody, the corporation deducts it. Retirement savings. There are a ton of options for small businesses to set up retirement plans for employees or for owners to take care of themselves, to do it on an affordable basis, if you will, that it doesn't have, you don't have to go for the full deductions and the most that write-offs possible. You can just help employees save for their financial future, which is a big concern of many employees, by having a qualified retirement plan. I already touched on the tax credits that you may be entitled to for doing this. Understand that if you're self-employed and you're the only person working in your business, you can have a 401k. You can have a 401k just for yourself. It's called a solo 401k. That's fine. If you don't have that, or perhaps in addition, if your income permits it and you want to have an IRA, you can use your tax return to fund the IRA as long as you get it early enough. If not, it can fund next year's IRA, assuming that you're eligible to do it. And remember, there are income limits for contributing to a Roth IRA, and there are income limits to taking a deduction for IRA contributions if you're considered an active participant in a qualified plan. So if you have the 401k and also want an IRA, you got to look at the income limits. Business driving. There are two ways to handle your business driving. You can write off the actual cost what you do for repairs and maintenance and gas and oil and all of that, or you can rely on an IRS standard mileage rate. The standard mileage rate for 2025 was 70 cents per mile. For 2026, it's 72 and a half cents per mile. Plus, you can deduct your separately, regardless of the method you use, your parking and tolls. Again, you're going to need good records to show, well, your little parking cost that you may have incurred. A home office deduction, I just wanted to mention, because more than 60% of small businesses operate from home. In the past, a lot of people thought, well, if I take a home office deduction, it's an audit red flag. The IRS is going to come after me. But given the fact that so many people now operate from home, that's no longer an issue, in my opinion. Um, Obviously, the IRS has not shared statistics on this. But anyway, if you operate from home, you may be able to write off some of what would ordinarily be your non-deductible personal costs as a business expense. There's also a standard home office deduction, sort of like the mileage rate. It's pretty modest, but that's an opportunity because then you don't have to go through all your electric bills and everything else that you pay personally to figure the home office deduction. Again, you have to be eligible to take it. You have to, the home office basically has to be your principal place of business or the place that you do your administrative tasks. So if you're a plumber, your principal place of business is considered where you perform your services. But if you use your home office to order supplies and keep your books and such, then that can qualify. Okay, I think at this point we can take some questions, and I'd be delighted to answer any questions you have, but it has to be general questions. I can't answer questions about your specific tax situation. Do we have any questions, Tiffany?
I have a couple here. Do you have any specific tax software that you recommend?
Um, well, I know the tax software that I use, but I don't want to endorse any particular software. I think the point of using the software is that if you use the same software year after year, you can import the numbers from the prior year into the current year, and it really, first of all, it will allow you to see how things have changed from year to year. But sometimes it's the same information. Like for me, my home office deduction doesn't change from year to year, and so the information is there, and it's great. So I would suggest a little consistency. Um, be sure that if you use software, it will accommodate your particular tax situation. So, for example, if you are a C corporate, yeah, a sole proprietor rather, and you're filing a Schedule C, um, you would want for TurboTax, you'd want the TurboTax, I think it's TurboTax Home and Business or something like that. Some make sure that that the software that you buy accommodates the business return that you need. And in many cases, you need separate software just for the business return.
Okay, perfect. It's helpful. Let's see. If you have is it SEP IRA
That, mm-hmm,
and you deposit up to the allowed limit, is
mm-hmm.
all of that amount able to be deducted?
Yes, and that's why there's the limit, and there's an annual limit, and there's a limit. Um, there's a basic limit. Remember, the employer is making the contributions to a SEP. It's not employees, so it's a business deduction. Uh, and unless you're self-employed and you have a SEP for yourself, and then it's a deduction that you take regardless. You don't have to itemize in order to take that deduction, but it's the full amount, but it's only up to the dollar limit for a particular year. So I think for 2025, the limit was $70,000, and the limit for 2026 is $72,000. So that's a lot to put away. And you have to have sufficient earnings in order to justify that because it's a percentage it, the general rule, it's 25% of your wages up to the dollar limit, or for self-employed people, because there's a special formula on how you can compute this, it effectively amounts to 20% of your net earnings from self-employment. So again, there's a limitation, but up to the limit, yes.
Okay, great. Let's see. Do you have key resources for where um, business owners can learn about IRS tax breaks?
Well, there are a couple of good resources. One is the IRS has a free newsletter for small businesses. So you can go to the IRS website and sign up for the free newsletter. It comes out usually weekly, but sometimes they're tardy and it's not on the week, But it will apprise you of anything that's really new or remind you of things that you have to that upcoming. So that's a good resource. And then, I offer I offer resources for small business.
Yeah, perfect. And last question. What are the tax differences between a partnership and a multi-member LLC?
Basically, none. Basically, they are treated the same. The multi-member LLC files the partnership return. The rules for how you divvy up things and how and the K1 reporting for owners and how the owners report on their returns. So a partner and an LLC member report in the same manner. So there's no difference. The difference between the partnership and the LLC, if I could back it up just from my lawyer perspective, is that the partnership operates under a partnership agreement and the LLC operates under an operating agreement, and that those legal documents will specify how profits and other tax items will be divvied up to the owners. So that's really the only difference.
Okay, perfect. Well, thank you so much for joining us today. We really appreciate it, and we definitely learned a lot about small business taxes.
I just want to thank everybody for joining me today and wish you good luck with your taxes.
Yes. Oh, wait, we have one quick last question. Do you have time? Do you have time
You
to
want
answer this last question?
Sure.
Okay, just real quick. Is it smart to leverage investing in all of your retirement accounts first as a single member LLC, using as much revenue first before paying yourself a reasonable amount?
Well, this is a personal issue. It's not a tax or a business issue. I will tell you that the more that you can put away in a retirement plan over the long term, you will have a significant amount of retirement income. And I can't stress that enough. So um, many small business owners view their business as their retirement plan. They think that I'm going to build up my business and then I'm going to sell it, and that's going to be my nest egg for retirement. And I unfortunately have seen too many business owners try to sell at bad economic times. They don't get nearly what they need if they could sell it at all, and sometimes businesses go under, and then they have no savings backup. So the thing about putting money into a retirement plan is that because of tax penalties, you really can't touch it. So it becomes segregated, it's separate. And if you just do kind of sound investing and just some solid investment choices, over time, you're going to build up to a very, very nice retirement savings. And so again, if you can afford to do it, it's a great idea. Today, I know a lot of people are struggling with expenses for their mortgage and the cost at the supermarket, and it's very challenging to do that. But again, if you can, it's a great idea.
Perfect. Well, thank you for squeezing that last question in. And thank you again for joining us, and thanks to everybody for attending. Take care.